Okay, good morning to all COL customers present here at Meralco Theater and those that are watching us through Slido. Welcome to COL's mid-year market briefing. Okay, as you all know, that the first half of the year, the Philippine stock market entered into a bear market territory at the end of the period. And this was brought about by, emerging markets were affected by the rise in US interest rates, which caused, a massive outflow or withdrawal of overseas money in our markets, causing the highest level of volatility that we've last saw in about 2.5 years. I guess the question in everybody's mind today is, will this volatility continue? And how should I position my portfolio to be able to take advantage of the opportunities ahead? It has been a very difficult investment environment for all of us this year. I guess you all agree that it was, after seeing an all-time high, it hit down by about 20% in about 5 months. And that made it very difficult for us. And I guess we're all wondering, what should I buy? Should I be buying value stocks, growth stocks? Or should I look at blue chips or small caps? Or what sectors I should even be putting my investments in? I guess that's what we're supposed to do today, and I'm sure that April has prepared a list of stocks that you should be looking at to best take advantage of the opportunities ahead. As well as one is who will talk about or give his views about stocks and market trends. But, we were in Cebu and Davao the last week, and I spoke to some of our clients, and we had some interesting discussions. And most of the people that I spoke to said, it's now becoming more and more difficult to watch or invest in these markets, not only because of the noise that we're hearing in the market, but also because I don't really have enough time to do so because, my work is taking most of my time, and or managing my household is also becoming very difficult. So I told them that, they should consider looking at other alternatives to invest in these markets, and this is what we call the equity index funds. If you ask me, I think for people who really have very little time to monitor or study many individual stocks, they should really consider investing in equity index funds. And equity index funds should comprise about 50 to 60% of your portfolio. This is really a low-cost way of investing in a group of good companies and in different sectors. But this does not mean that you will stop, monitoring the market. On top of these equity index funds, I think you should still continue to look at your favorite stocks that April will be presenting to you today. And this is how you will enhance your portfolio. So this is now available in our website, in your COL account. And the beauty of this is equity index funds, you don't have to pay any fees. It's for free. So you can just buy equity index funds and put it as part of your portfolio. Okay, another thing I want to also tell you today, I know this is something that has happened maybe early part of the year, but I would like to tell you that it's really important to us, and that's why I'd like to mention it to you. I know that the early part of this year, we failed to give you a reliable platform. And you know that the surge in the market volumes in the first few months of the year really caused these systems to really hit its capacities. I know there's no excuse for what has happened, and I know that that even despite the fact that we have been investing regularly or every year a substantial amount of money in our systems to maintain it and even to upgrade our capacities. And, we do this to ensure that you will be able to access our website anytime that you wish to do so. I know that no company can really genuinely promise that this will not happen again, but I want to assure you that we're doing the best we can to make sure that we will prevent this situation from recurring. Another thing I want to assure you is that COL is putting a lot of its efforts or working hard and also continues to invest and allocate the resources that we need to make sure that we provide you the best investing experience possible. So without any further ado, I'd like to now pass you on to the people that you've all been waiting to hear, our experts, and I'd like to welcome you today to our market briefing and hope you have an insightful morning. Thank you.
All right, I'm sure you're all very excited. So without further ado, let me invite to the stage our Chief Equity Strategist, Ms. April Tan. Joining us also is our Chief Technical Analyst, Mr. Juanes G. Barredo. Okay. All right. Thanks for joining us. But before we start, I'd like to see how fantastic the seats are. So the seats are brought to you by Citymex Incorporated. You can check their website if you want to. So I'm sure we're all very excited, no? So thanks again for joining us. So first off, we came from a fantastic 9,000 level from the early part this year. And just want to ask you, April, no, what happened since then, since the last outlook we've had to today?
Okay, so I think year to date we're down around 11%, probably a little bit yet, less because we rallied. Mm-hmm. We rallied quite strong the past month. But I think what hurts investors is that they were very bullish in January, mm-hmm. and I think some bought in the early part where the market was hitting 9,000, mm-hmm. and we're actually down quite a bit from there, like 16%. And to some extent though, when we did our market outlook briefing in January, February or early February, it wasn't surprising because we already highlighted some risks. And this included the higher than expected inflation or the possibility of it happening given the tax reform program, rising oil prices. And unfortunately, it really did materialize. If you look at this chart here, you will see how inflation has gone up. So the dark blue line is the headline inflation that we read in the newspapers, and the light blue line is core inflation. Okay, and the difference is, of course, the headline inflation includes more volatile oil prices and even rice, which has gone up a bit. And core includes, second round effects, demand-driven inflation, so to speak. I mean, if your economy is strong, that's what happens. People are just willing to pay a bit more. And people are really better off right now because of the tax reform program. They have more disposable income, so they're lower income taxes, and the jobs created by the Build program. So, I mean, never mind if we have high inflation, if the economy is depressed anyway, or market is depressed, but we were coming from a high base and valuations were a bit lofty. During the start of the year, we were trading at around 20 times PE. And our fair value estimate, or at least our target for the PSEi for the year end was 9,300. So you were just a little bit, little bit more na lang you're at the year-end level. So there was really no upside. People were very bullish. So it created a backdrop where it's easier for an investor to sell rather than, hold on.
Before we move forward, April, no? In fact, up to 5,000 of our customers are joining us through the Slido app live in their homes, and my mother is one of them. So my mother is watching us. Ayoko mag-plug. But anyways, just wanted to ask you, how does inflation actually affect the market, specifically?
Okay, so it has a negative impact in the first place, one of the major effects is interest rates. Okay. Interest rates will go up. Okay. And of course, if interest rates are higher and you have cash, it's, first of all, you think of putting it in time deposit instead, putting it in bonds instead of buying stocks. You want higher returns on your equities. So in terms of valuations or fair value targets, you adjust it lower. Mm-hmm. Okay. So, you have to be able to buy stocks cheaper. Because, of course, their cost of equity also goes up. And another impact is, of course, the risk that because inflation is higher, people will spend less. Okay? And especially for the CD market. So we had income tax cut. But if you're already earning minimum wage, you don't pay income taxes. So you just get hit with higher cost. Of course, there's a tendency for you to spend less. Yeah. Okay, so on top of that, another risk that happened in the first half was when when inflation initially went up, the BSP did not raise rates immediately. It took them a while. They only raised rates in May. So people were a little bit concerned that they were behind the curve. Inflation would go out of control. That's not good for sentiment. And then, of course, aside from that, we saw globally emerging markets becoming out of favor. So if you look at the chart there, the dark blue line is that of the PSEi. But the light blue line is the MSCI Emerging Markets Index. So you can see that initially we fell ahead of everybody. But then at one point, I think around the April, May area, we fell together with everybody. So there was an emerging market issue. And, you know, later on we'll talk about the factors that were responsible for this.
Sige. All right. Now, moving over to Mr. Barredo. Sir, what happened to the market based on your technical perspective?
Well, stemming from what April talked about, we did go through some harsh periods in the first quarter. It went from a very strong market and overturned relatively quickly. All right, and after falling all the way down to a low closer to about 7,000, 6,900, the market managed to be able to make a recovery, and we're currently into that recovery phase right now. The pullback, however, that we've seen was a little heavier than what we anticipated first, and primarily for the reasons that April did point out, that of course inflation came out very quickly, and we really felt that there was no clear response immediately by our government to be able to stem what those inflationary tides are trying to do. So what investors do when all this uncertainty comes off is get out first and let's see what happens later. So they took that defensive stand and our market managed to be able to fall quite a bit since. And if you were to look at the charts we have today, you see on the upper left-hand side the chart of the Philippine Stock Exchange Index. And after coming off from the high band of that range that I've drawn out, it went all the way to the lower end of the range, and it's bounced there recently, so hopefully that'll be a strong point. We were not the only one that corrected. Other markets corrected too, although the correction in the US was very faint. It wasn't really too substantial. But the chart on the right side is the emerging market index, which shows you a broad number of emerging markets put together. And you can see there also that we did see quite a bit of a corrective stand take place. So we kind of all did this together. Other countries had their own inflationary problems. Some countries also had to deal with rising interest rates. And that's why we had to go through this very, very large hiccup.
I have a short question there, Juanes, no? With regard to the defensiveness of the policymakers. Parang right now, I'm sensing that if the more they become defensive, the more they're actually wrong. Is that a valid statement?
Well, I don't know, maybe April can, but in my personal opinion, I think maybe they felt that the aggressive stand of inflation wasn't going to last too long. And since Train had just come out, I guess they wanted to see how it would really affect the whole picture entirely. And so they were playing a very reactionary game into it rather than being a bit more looking forward as to what they can do to contain it. But I guess it's really not that easy to be able to see these question marks as you try something new, right?
All right. So, moving on to our next topic. We have some more slides, sir.
Well, this slide is just simply show you how far the Philippines dropped, right? Because I think Mr. Bate earlier said that the PSEi dove into bearish territory, and just as a standard definition in technical analysis, a market or an index is considered pushed into a bear market territory if it goes below the 20% zone. That means from the highest point, if the market drops more than 20%, then that 20% threshold is called a bearish market already. However, there's two things that have to condone that. One is it has to go to the 20% zone or more and stay there below that range for at least 2 or 3 months. That second part of the definition we did not do, so officially we're not there yet. Okay? But you can see other markets also did show some heaviness in terms of the sell-off that they had. And we'll talk about this also later, but just to give you a sense of what the ranges might look like for the PSEi index, after hitting that low of about closer to 6.9, the recovery that we're seeing right now is stemming here with the rally. The nice thing is we broke out of that downtrend line. That tells you that the corrective trend is finished, and now we're having a recovery swing coming into place. What we're just waiting for is to see how high this particular market can go. What happens after this, we'll talk about that a little later when we give you the scenarios for the particular market. But hopefully we can try to go between a range of 7.9, maybe to an aggressive sandpart, maybe 8.2 if possible. But I think 7.9 to 8,000 might be a little hard to break.
I guess my mother will also have a lot of questions later on for you regarding this. Okay. All right, so moving on to our next topic. Of course, when you registered to this event, we asked you a couple of survey questions, no? And the question was, what do you think is the factor that will affect the market in the next 12 months? And so far, 25% of you guys answered economic growth. 19% are concerned about fund flows. 18% are concerned about inflation. 15% are concerned about the performance of global markets. 14 for weakening peso, and 9, a small percentage of you, are concerned about the escalation of the trade war. Now, given this, there are also a lot of foreign factors here, April, no? So, given that a good number of our customers are concerned about foreign factors, what's your view on the foreign markets, about the things that they just raised?
Okay, so I think the second most popular answer was foreign fund flows, and indeed, it is a worry because as you can see here, when the market was falling, we saw net foreign selling. Quite a bit of it. We only saw net foreign buying in January. The rest of the months, there was a net selling, and net buying came back just last week. So they really have an influence. I guess the question is what caused the sell-off. So if we go to the next slide, we'll see one of the main factors. I think there are many factors, but if you put everything together, what's one thing that you should look at? I think it should be the US dollar. The US dollar strengthened quite a bit during the start of the year, and this was largely due to the tightening of the Fed. And the Fed was one of only a few central banks this year that actually raised interest rates. It raised interest rates twice already, and in June, when it had a meeting, it kind of implied that it was going to raise rates 2 more times until the end of the year, which was more than what people anticipated initially. Of course, with yields in the US becoming more attractive, you see funds flowing back there, which in turn led to the strong US dollar. Okay, so unfortunately, I want to show a slide where there is an inverse relationship between the performance of the US dollar in emerging markets. Okay, so a strong dollar is not good for emerging markets. You can see in the past, as the US dollar weakened, emerging markets performed very strongly. Sentiment for it improved substantially, whereas when the US dollar started to strengthen, you can see how emerging market equities have been sold off.
Just a quick clarification, April, no? Parang nag-tweet yung nanay ko eh. So if you see increasing interest, if you see increasing interest rates, aren't it supposed to affect bond investors instead of equity investors? And here you see the inverse relationship between the stock index of emerging markets and US rates.
I think both of them are going to be affected, both bond and equity investors. Okay, when the interest rates go up, bond prices go down. So it also hurts bond investors.
Okay.
Okay, so, another concern that people had why they sold off the Philippines anyway, was concerns of how the US-China trade war would affect us, and actually how it would affect Asia and emerging markets in general. But when you look at the MSCI Emerging Market Index, you have to remember that China accounts for 33% of the index. So a foreign fund manager seeing how heavily weighted towards China, the MSCI index is, they will just sell everything emerging markets without taking into consideration whether an economy is less vulnerable, such as the Philippines. They will focus more on, the heavyweights, such as China. I mean, even say Taiwan and South Korea, they are very export-dependent countries, and they have big exports to China. So they are a lot more vulnerable, and us being part of that, even though maybe we're 1 to 2%, it doesn't matter. We're gonna be sold off anyway because we're part of that basket.
Kasama tayo sa benta, no, in that basket. And I think kanina, that's the first news I got from my phone when I woke up this morning, China retaliating with another 60 billion worth of tariffs. So we'll continue to monitor that, So moving on, let me turn to Sir Juanes. Sir, what's your view on the U.S. markets, yields, and the strength of the U.S. dollar, as April mentioned?
All right, so the U.S. market actually is still quite strong. Although about last week we experienced some heaviness in some tech issues that managed to be able to slam down quite strongly. We get really big declines by companies like Facebook, Twitter, and it really hit the NASDAQ hard, but it's rallied since. So far, I didn't see anything break on the way down, and you can see the picture of the S&P 500 there. We're still in a recovery channel or an advancing channel, so everything still seems to be okay. However, we're trading on the high band of the range. And that means that I would anticipate more volatility for the US market. Also, if you were to look on the left-hand side of that graph, you also are testing a previous high in the S&P 500. So this is, double resistance. The heaviness here could be quite something to be able to, as a challenge to prices. So I'm anticipating we'll still more volatility here. There is a chance it could still dip back, and that's why we're watching it very carefully for the meantime.
So just to clarify, sir, for us technical fans here,
Yes.
you mentioned heaviness in the resistance.
Yes. So resistance is an area above the market where people are anticipated to expect some selling. And these areas are usually built by people who are perhaps have managed to be able to make some money already, or in the past, if they got stuck in the previous high and they've not been able to sell their position, when the price comes back to that price that they originally got in and you're giving them an opportunity to square it out, they will square it out. And so those people, plus those making money right now, waiting to sell, create that resistance or that area where we anticipate some heavy selling is going to be.
Okay, that's why you're saying in that chart, then yung previous high ni S&P 500 and the top of the channel.
Yes, that's right.
Fantastic.
Anticipate some pressure there on the selling side.
Okay.
All right, so taking from what April mentioned earlier, we also noticed some advances into the 10-year Treasury yield. The 10-year yield, or the 10-year yield of the 10-year bond in the US is simply an instrument we watch because we want to get a sense of whether interest rates are still putting upward pressure, or does it look like it's simmering down already. And the picture that I'm seeing there, if you notice, I also drew an upward channel on the right side. And that means after being very aggressive, that's in the first half of the picture. On the right side of the picture, you see it seems to be a bit slowing. So it's going up, but a little bit more moderated now. And that's exactly what you want to see. You don't want an aggressive condition here, because if it's trying to tell you that interest rates are going to pick up very quickly, the market will all run away and be very defensive. But in this particular case, since it seems to be more moderated, then it's fine to have a moderated type of increase in rates because it is reflective of a growing economy, but it's not a runaway situation, which we don't have to panic about. And so far, that's a good thing. Then can we have the next, please? All right, so what would the impact be on the US dollar? So if you notice a picture of the dollar, there was a really big surge that you see here come in May, June, but it stopped and it managed to park sideways for a while. Now, some of you who study technical analysis will look at that pattern up there and you might get a little bit more worried about it because we call that an ascending triangle. That's supposed to be a bullish pattern. And if that thing breaks the red line on top, that could generate more acceleration into the movement of the dollar. So everyone's watching this right now to see which way this is going to break. If it breaks upwards, and like April said, if the dollar is inversely related to the Philippine market, if that shoots up, our markets will have to hiccup backwards all over again. So this is something we have to be very careful about into the next 1 or 2 weeks, because I think it'll take about that time to decide.
All right. So how about the
All right. So
Philippine peso?
on our side, how would it relate into the Philippine peso? The peso-dollar rate has not really done too well in the last few months. However, in the last month, it has managed to be able to dip back from a very aggressive stand that it did. And that reason for that primarily is because the dollar moved sideways. So it's also taking its cue in the dollar. So the other day, the dollar fell back to the lower end of the range, and our peso did the same thing. In the last two nights, the dollar managed to surge back up, and that's why our peso rebounded from closer to about 53 or 52.90, and it managed to be able to make a rebound. So as long as it doesn't break below 52.90, then the trend remains to be on the weak side for the peso. It would be nice to see that below, but right now, it's too early to be able to tell if we can get something more bigger on the downside. But if the dollar does break out, this is going to weaken again.
Okay.
I think I have one more to talk about. Oil.
Yes.
Again, stemming from the threats of inflation, I guess this is one of the bigger components that we'd see that could influence inflation. The worry here is that the trend in oil is still upwards. And we are coming, however, on a corrective front for oil, but we're coming towards an area that is nearing major support. So I would start anticipating that there might be some demand buildup for oil in about this stage. So I don't know if we're going to see any heavier pullback in oil. It would be nice to see that, but of what I've been reading last night, I've actually been reading that there might be even supply issues because of what's being happening in Argentina, and of course what's been happening with Iran as well. And these are two major supply providers for oil. If there is more curtailment there and supply starts to tighten, your basic economics will tell you this more likely will rally up. But the trend maintains that same stand as well.
All right. So moving forward, of course, if I may summarize what we've just talked about, there are concerns about, of course, increasing the rates back in the U.S. and probably some potential of local interest rates to also increase. The dollar strength is a real concern for us, no? Because, of course, that also defines how much the funds here in the Philippines will flow back in the U.S. And now, let's talk about the strategy. How do we deal with that? So first, we asked our customers, again, when you registered, this question: what do you think will be the end of the PSEi in 2018? And a good number of you guys, around 36%, are weak bulls, meaning that you expect the market to be between 7,500 to 8,300, while the next majority, around 34%, are neutral, that you expect the market to end around 6,900 to 7,500. Thankfully, we're still a bit positive for the market, at least moving forward. Now, let me go to April. What are the catalysts that can potentially make this weak bull happen?
Okay. I think our clients are correct. I kind of believe we're in that range, no? We'll end the year around that range. We've revised our PSEi target, and it's around 8,600. But, that said, the question is what are the catalysts? What do we need to see for it to reach 8,600? We feel like first inflation has to show that it is finally peaking, and then listed companies have to prove that their earnings remain strong even with all these threats of inflation and what have you. The U.S. Fed, we would want it to stop raising rates, or at least surprise us with less than expected rate hikes, and U.S., China, or global corporate earnings to remain much stronger even with these trade war issues. Okay, but unfortunately, for now at least, we still see a lot of inflationary pressures, as Juanes has talked about oil. It continues to go up. And rice still continues to go up. And the reason why rice is a problem is because that's around 10% of the Filipino spending basket. So in other words, 10% of a normal Filipino salary goes into buying rice. And according to the BSP, well, right now kasi the price of rice in the Philippines is double that of other countries.
Oh, okay.
Okay, so kaya nga ngayon, di ba, they keep on talking about the rice tariffication program. And even in Congress, they say we will prioritize tax reform and rice tariffication program. Because based on their estimate, if, for example, the plan is, okay, we'll allow more imported rice to come in, which is like 50% off, and instead implement a tariff of 25%, 35%, and use that tariff to support the farmers, which they were initially trying to protect with the higher rice prices, then at least, a big majority of Filipinos who are not farmers will also benefit from the lower prices. Okay, so that's what they're looking at. And at the same time, that will reduce inflation by close to 1%.
Okay.
Okay, that's really a big help.
Mm-hmm.
But anyway, it's still a problem right now. But I think that's something we really should monitor closely. And aside from that, the peso continues to weaken, and unfortunately, we import a lot of raw materials, a lot of the things that we use, and they're becoming expensive. Okay, so inflation remains to be an issue. Okay, and I just like to point out that a while ago you were talking about the BSP being behind the curve. So why were they behind the curve? If you look at this this is a month-on-month inflation chart. So if you look at the month of January, you will see how on a month-on-month basis, it went up to 0.9%. And to some extent, it's not surprising because that was when the excise taxes were implemented, which led to higher inflation, higher prices for a lot of items like oil, sugary drinks, like even your cars, they became more expensive. And I would think that a lot of businesses adjusted prices to reflect these higher costs. But, initially the PSP said, if you look on a month-on-month basis, you see that it's trending lower to the point that for the month of May, it was 0. Okay, that's why, remember in June, they were saying, oh, inflation has already peaked. They were like so proud and saying, it's not going to be a problem anymore. But lo and behold, for the month of June, it picked up again. So finally now they are saying that, yes, inflation is a problem. We're going to be more aggressive about it. We're not going to cut reserve requirements anymore. And I think the market is anticipating next week that they will raise rates. Okay, so that's inflation. And then another factor is that we want to see is the Fed not raising rates anymore. So here, I'm sharing or I'm showing the dot plots. When you read the papers or, watch the news, they talk about the dot plots. Ano nga ba talaga yung dot plots na yan?
Oo nga.
Anyway, the dot plots is something that it represents the views of the members of the FOMC.
So each and every dot represents a vote.
Yes, a vote
Okay.
of what they think interest rates should be by the end of the year.
Okay.
And they get the median of it. So, talagang yan yung binabantayan nila. And they noticed nga that nung June, when they got the median for 2018, it implied that there would be 2 more rate hikes until the end of the year, bringing the total rate increase for 2018 to 100 basis points. So clearly the Fed rate hikes are not yet set to end anytime soon because 2019 may 3 pa. So there are 2 more this year, 3 more next year, potentially 2020, 1 more. But the market is anticipating it will end with the 3 rate hikes next year. So I guess this is something that we have to monitor religiously, again, during the meetings. But, if it's status quo, then ibig sabihin, we'll continue to see a strong dollar. because they'll continue to raise rates.
Question, April. Is it the expectation of higher rates or the actual increase?
I
Kasi
think
magkaiba
it's,
yun eh.
it's both.
It's both.
It's both. I mean, if it continues to increase, then of course, the dollar will strengthen kasi yung actual yield mo mataas eh. Pero to a certain extent, well, those who have been bearish because they anticipate it to go up so much, if, for example, the actual increase is less, then they will be happy, di ba? Okay, and then lastly, we have corporate earnings growth locally and in the US, China. Unfortunately, second quarter earnings, so far, we've seen some good ones, but most are still disappointing at this point. Wala pa yung talagang, blockbuster. Like, I think 2017, remember, we had a strong market, and that was one of the reasons. We had very strong corporate earnings that beat expectations. But so far, we're not seeing that. And possibly, the second quarter will still be a weak period because of high inflation. The impact of the US-China trade wars will not be evident until maybe the third quarter earnings season. And the results will not come out until, say, October, November. So it will take a while for these other catalysts to materialize, unfortunately.
Okay.
Some good news. You want to talk about the good news already? So,
Pwede naman. Parang
Okay.
naging sad na ako eh.
okay.
Daming
So,
concerns, no? Ano yung
So,
magandang
yeah.
balita?
Parang, well, it seems to be sama. But I think the good news is, I think though, when we saw 6.9, I think there's a strong chance that that was already the low, fundamentally speaking.
Okay.
So that's one
Phew.
part of it. So,
Minsan ako ah.
so one of the reasons why we think it's 6.9 is the low is, first of all, the magnitude and duration of the correction, in our opinion, is adequate enough. First of all, we track the historical corrections, and the average drop is around 17.3%. And using that average drop of 17.3, then the PSEi would be 7,495. So that is the 17.3% drop from the peak.
Okay.
Okay, and I think later Juanes will discuss how, those who, kasi I've also seen reports saying, no, the drop shouldn't be 17%. We should look at the past three corrections, which are much deeper, which is
Okay.
like 20+%. But even if we use that as a basis, 6.9 is actually 23%. So we also met,
Okay.
we
Right.
met that stricter requirement. So yung dalawa na meet na, like even the duration,
Right.
the average drop is like 3% in duration,
Okay.
and we're now like 5 months, 6 months into the correction. So we've met, I think, those minimum requirements in terms of magnitude, duration.
Okay, so,
And
so
then, yeah.
just to clarify, no, this is a table of all the corrections, ladies and gentlemen, from 2004 to the current.
Yeah.
And we got the average of all those corrections in
Yeah,
terms
yeah.
of the depth of it and how long it took.
Yeah, yung mga bottoms.
Yung mga
yes.
bottoms
Yeah.
natin.
Okay. And then valuations, I think, which is more important for me, at least. The valuations of the PSEi have become more attractive, and now are very attractive, actually. So what we did was, we took the 10-year historical average of the index constituents. And that is the zero line. That's the average PE. We didn't say na this stock trade at 10 times, this stock trade at 15. And yan na namin, standardized. So if it's at the zero line, it means you're trading at par with your 10-year historical average. Okay, if the blue line is above that, it means that you're trading at a premium to your 10-year historical average. And if it's below, it means that you're trading at a discount to your 10-year historical average.
So an easier way of seeing this slide is that if it's within the zero line, it's par with its historical price.
Yeah.
Tama?
Parang
Hindi siya
fair.
mahal.
Parang
Fair.
tama lang, ganyan.
There's a blue line below, isa sabihin mura.
Yes, yes.
Oh, okay.
So you will see that most of the stocks really are cheap. Kasi ang problema, di ba? I mean, you'll read a lot of reports, and then some of them will highlight how yeah, maybe the PSEi is 16 times, 17 times, but you know, that's still above the 10-year historical average. But in my opinion, in some ways, nadi-distort yan eh, because 10 years ago, we've talked about how the PSEi constituents change over time, and SM was not
Small
as
amount,
big.
right, before.
Yeah, but now SM is a huge index constituent, accounting for maybe 10% of the PSEi, even SM prime. So, yung dalawang yon, they will bias the PEs higher, but I don't think that is the right way to look at it. A better way to look at it is to look at each and every constituent, and as you can see, majority are trading at a discount.
Okay, marami ng mura.
Yeah, and finally, we want expectations to be much lower in general so that it's easier to beat. And that's exactly what we're seeing. When we had a briefing during the start of the year, one of my concerns personally was that people were anticipating inflation to just be 3.6%. Na, in my opinion, I felt was too low given the inflationary pressures. But now the forecast has changed, has moved upwards to 4.5%. 10-year bond rate from 5.3%, people are anticipating it to be 6.2%. Okay. Analysts have cut their EPS forecast for the PSEi by 4.6%. Tapos kami, yung target namin for the PSEi, initially it was 9.3, it's now 8.6, which is a lot lower. Kumbaga nag-derate na. And my feeling is it's easier to achieve. And of course, the actual prices of the PSEi, the actual bond rates, they're much lower at this point. Implying that people are pricing in all the negative. Hindi na sobrang exuberant. The exuberance is no longer there. People are a lot more conservative today, which is very good news.
Okay, all right.
Okay, and finally, a while ago, people said that their main concern was economic growth. Is there really something wrong with the economy? And I'm just happy to say that there is nothing wrong with our economy. Okay, if you look at the first quarter GDP growth, the main driver really was government spending, which increased by 13.6%. Okay, this is something that, in the past we wouldn't see, because in the past it was household consumption that was carrying the load, no? And, the strong performance of government spending, I think, is sustainable in the second quarter. Okay, government disbursements already increased by 14.9%. So that's something that you can actually already see. They already disclosed it. And then if we go to next year, they already came out with a budget. Okay, and the budget is for spending again to increase by another 13.2%, with the DPWH budget increasing by 68.3%. Okay, so that will not only help government consumption, but also capital formation. No? Infra spending goes there. Consumer spending, in our opinion, will continue to benefit from the effect of the tax reform program because of the lower income taxes and resilience of OFW remittances and the weak peso. Like it or not, for people who travel, of course, that's bad. But for Filipinos who get OFW remittances, that's very good. They actually spend a lot more.
Pansin ko lang, April, no? Capital formation, 12.5%. Ano ba yun?
Yeah, that's the investments that go into the country. And a big part of that would include private construction and public construction. So when the government spends on roads, bridges, dyan siya lalabas. Yung
so parang nangyayari na talaga yung mga sinasabi nila.
Yeah. It really is good. Then that would have mga secondary effects. Pero ngayon di pa kasi tapos, kaya dyan pa lang siya lumalabas.
Tama, yan. At least I'm feeling a little bit more confident. All right. So for strategy, April, can you just walk through us?
Yeah, I guess, that said, I think we're in a situation where the glass is either half full, half empty, but I'd like to view it more as a half full glass at this stage. Yes, we have to be a little bit cautious, but cautious not because it's going to go down, but I think this is our chance to accumulate for the market to go up over the longer term. So I guess the question is, should we buy all at once? That's one of the questions actually that investors asked when we went to Davao and Cebu. Why aren't you recommending lump sum investing instead of peso cost averaging or accumulation in the next few months? Just like to explain that we still have a lot of challenges in the next few months. Okay, so if the market is still going to be volatile, then we might as well take advantage of it so that we will be able to buy at cheaper prices in case they correct. Okay, there is, at this point, I don't see the risk of maiiwanan ka. So if there's a risk na, being left behind, then go ahead. We do lump sum investing. Okay, still long-term investment because this recovery could take a while. We don't want to, our investors to maybe, put at risk money that they might need next year, diba? In hopes that the market will recover strongly right away, And large caps, simply because we feel like with everything cheap, what will be prioritized is yung mga kilala, the large caps, the well-known names. Parang pumunta ka sa sale. Unahin mo yung mga magaganda, di ba?
Branded.
Tapos yung mga sobrang mahal dati na biglang, ngayon mura na. And then of course, if you have something left behind, babalikan mo after 1 to 2 weeks, pag may second sale na, then yun, babalikan mo sila, di ba? So that's just level of priorities. Okay, and of course, diversification is very important. Let's not put our eggs all in one basket. Interestingly, Tino was talking about diversification a while ago by buying mutual funds. I mean, really, that's one way you could do it, especially if your portfolio is still small and it's hard for you to buy a lot of stocks. You could actually just buy an equity mutual fund or an index fund to have a diversified portfolio right away, even if, it's just one issue lang.
Okay, thanks for that. Okay, so moving on. Sir Juan is for, active investors such as myself. I guess my next question to you is, yung 6.9, as April has mentioned, looks to be the bottom already. Now, in your perspective, sir, technically, is this going to hold? And another question, just to follow it up with, are we seeing the market, at least in a technical perspective, to go back to its former highs?
With regards to the low, I think there's a strong possibility we've seen that low already. In fact, when I started in the beginning of the year, I was looking at the worst case scenario at 7,100, and it went even deeper than that.
Yeah.
And so, in my anticipation is that it was an area of major support that was supposed to be cast there, but like April pointed out, there were a lot of exiting funds that were just selling and wiping out their positions because of the unknowns that were taking place, and they wanted to play a very defensive game. And it's really because of that I think the market is now breathing some life back, because I think those foreigners who wanted to sell probably they've already erased a huge amount of their portfolio and probably have the Philippines very, very, very small weighted already. So I don't see how much more that you can turn over and sell this market to a low point. So more likely, I don't think we're going to break 6.9, even if the market does attempt to retest that support later on. I'll show you the scenarios later. And that this rebound, I think, has already shown some signs that these lows are going to be a low for a very significant reason. We've also seen some few issues that have made reversal bases or patterns that are telling me that the foundation for a recovery are in place. And these are all helpful because they generate that particular confidence in the investor base. They'll say, okay, I think I can start putting in positions again little by little over here. However, there is an argument on seasonality is that it's not going to be full stream ahead, okay? What you're going to see is going to be a very choppy market moving forward. I know you're seeing the market rally now. It's just looking for an area where the setting will begin. But what will come later will show some volatility, and I'll show you some examples of that in the next slide. All right. So, I mean, I guess this is one of the questions I get a lot of emails about. They want to know where the Philippine Stock Exchange is with regard to the Elliot Wave swing. And, I'd like to just point out that Elliot waves are very generic in their use, right? I mean, you cannot be too accurate with the way they're doing. But it generally gives you a sense that normally you have 5 waves going up, 3 waves going down to end the correction. After that, it starts all over again. And so with that particular prospect, we look at the first picture there. And in the first half of the year, when we met sometime in, I think in January, Feb, we did say that a major correction was about to happen. And here we are, we're in that major correction. And now we're coming up and rebounding from that. So it's quite possible that you're going, if you see the first slide, you're going from a first wave into a second wave on the Elliott wave theory, and that means that you might have a counter swing rally, which could be pretty good, but maybe gradually over in time. And a bigger picture of that's on the right side, also telling you that what we call an ABC correction has already likely taken place. This is normally a non-traditional type of ABC, and that simply means that I think the weakness here was really very strong. That's the reason why it really had the hard time of making a recovery. That should keep us also in a defensive now, because that means that if you saw a very weak market and people are only beginning to reposition right now, yes, you might have a little bit of upside, but no accumulation has been done, and you need one to create a foundation. Okay. I want you to imagine you're building a house. Before you start putting the pillars up to build your home, you must lay the foundation first before you can start erecting that. In the stock market, the way stocks would do that foundation is they will create a bottom or a base pattern. So think like you're putting cement in there to create the substance you have to create demand to go up. Without that being solid, you can try to rally, but it'll fall back down to that area again. Okay. All right? And so it's only a handful of stocks who've made those bases, not many. And so that means we're going to go through that process of building that base again. And that's why I think you're going to get some choppiness. Can we go to the next slide, please? With regard to my argument why I feel the market has hit the low, I'll give you a few reasons. So this chart has actually quite a bit of data inside that can prove quite useful. First, I showed you all the corrections we've had since roughly 2013, 2014 area. And majority of those corrections, if you see it, that go from a range of 24%, 25%, 19%, and just recently 23%. So around that ballpark figure, and I think April mentioned it earlier, at about that range, you see major lows. The other thing I always look for is when people come running after me and saying, oh, one is we breached at 20%, and are we in a bear market already? The minute they ask that question, that's also a dead giveaway that we're coming towards the bottom. Right? Because when that emotion is very high and people don't know what to do and they've liquidated every position they have, again, put yourself now in the camp. There's nothing more for you to sell. So how are you going to contribute to shooting that index down? So that's another positive note. And it did not stay there for 2 or 3 months. It didn't do that because it exhausted the supply of selling. And that's the reason why your market rebounded away. Second, if I may borrow some fundamentals, the PE bands, if you were to look at it, I put them there. Also show you major bottoms every time they hit this range between about 16-15 times. So again, that helps in casting the fundamental view, right? Some people might now argue, oh, maybe it's at this level, it might be a good time to do some bargain hunting and buying, and that solidifies the demand effect into that picture. And what I've also done, if you look, I've also counted the period in terms of months that it takes for a correction to run through. If you notice back in 2013 and 14, it lasted for 7 months, then 9 months in 2016, 5 months in 2017, and so far 5 to 6 months where we are right now. So again, you've corrected in terms of time just about what you needed to already. Right? So it's quite helpful that you have all these figures telling you the same thing. This is generally what it took for market correction to do it in time and to do it in price. So putting that together makes a very strong case argument that we could be showing major bottoms at this area here. If you notice the average rates, I've pointed it higher also on the right side. However, I did put a statement on there that's arguing that all of this, as long as every situation and every correction is the same, The only thing different we have today is inflation is running and interest rates are starting to move up. So that's the only X factor we have that we have to watch out. If we can see that it's okay for them to climb up, but gradually, not very accentuately, then that, I think, would probably still apply here. Anything untowards that may happen is the only thing that can mess things up. But I feel quite strongly that we've seen the low, and the arguments are very, very clear. All right, now I said the movement from here is not going to be as full speed ahead as many people think. Although we've hit a low, I say you hit your first low, then the base building comes, a gradual period of accumulation back into the market. And July is one of the strongest months that we've seen quite in Philippine history. And sure enough, last month, we did about 6.6% into index recovery last month. And so that seemed to have played out quite well. One thing also you will see is August, which comes after the very strongest month of the year, is traditionally the weakest month of the year. And so if you look at that down pull into the bar there in August, so after a very strong month, there is a tendency for the market to go through a profit-taking phase, and that's why we might start anticipating, of course, volatility or corrective volatility to come sometime in this month in August. The two weakest months, by the way, are August, and the next one would be in November. So if you guys are asking, so what period in the year should I start to look to buy? It should be coming towards the end of that August month. Especially if you do see that correction coming in August, then you can prepare. Diba? Maghanda na kayo to be able to lay the foundations of those graduated buys that you're making. Be already very much ahead by looking at the stocks that you want to buy. Don't do it while it's starting to rush up. Because when that thing starts to rush up, believe me, your mind gets clouded. All you were thinking of is how to participate immediately. Your thoughts run to the window, and that's not the kind of strategy. Plan it now. Try to be able to set the framework because you get a sense of when this weak periods will be, so prepare it already so you know what to do when it comes. Let me go to the next slide. Okay, so how do I anticipate the market moving forward? The rally we're still seeing right now is still in rally mode, and so what the market's going to do is going to try to look for your next resistance. In the previous slide of the PSEi, I did point out roughly, I think heavier resistance will be from 79 to 8,000. That's the first major resistance. If you can somehow break that, then I think all the way up to maybe closer to 8.3, somewhere closer to 8.3 might be the next one. But 7.9 to 8 is roughly before this thing rebounded, that's where I was looking at, okay, somewhere within that range as heavier resistance. If the market cannot break that, it's going to make a reaction, okay? Not all stocks will react the same way. Some will be sharp, some will be moderated. It is that moderated response that you should look for. So if you're going to pick a stock, what you're going to see is you're going to look for a stock that does not want to pull back too strongly. That tells you there's underlying strength. That tells you people are accumulating the stock as it moves lower. And so you should be doing the same because that's the kind of stock that is going through that demand wave. And as soon as that thing is finished, for example, you see the picture there, you see that goes down a little bit like a triangular formation. As soon as it punches out of that, then you're going to have to be a little bit more aggressive. But during that consolidation period, by the way, that could take 2 to 3 months to do, you can gradually buy your position into that particular avenue. There's a second scenario that might happen here. This might be a bit more frightening. The second scenario will go all the way back to your low, maybe even break it slightly, all right? But my feel for the index, that's not going to happen in the index, but it may happen to very specific stocks, especially those stocks that have been being battered earlier and did not really recover too strongly. Those is what you're going to see. In cases like that, especially if these are one of the stocks you're looking at, wait for it to rebound from the previous low. That will be your testament that demand is holding there and that more likely that you're going to get a nice floor to be able to base the trade that you guys are doing. So there is a third scenario, which is actually a much more stronger scenario. Instead of pulling back like the first chart I saw you there, the index will just dip slightly and go sideways, right? I'm sure you guys will have mixed emotion about that because one, if you had sold there, you're not going to have space to buy back with good reason to. right? And what I would suggest to do, if it just goes flat, maybe you can buy a little bit, then wait for the break above that, and then you can be more aggressive in your purchases later. But I think these two that I've shown you are a higher chance, particularly the first one, are more geared of that. And I've already seen evidence some companies are making that first type, or if not, have just recently broken out of that type of consolidation, which is also enforcing the base lag. Can we switch to the next slide? All right. The first chart you see there on the left side is BDO. I just wanted to be able to show you a sample back in 2016, just so you can see. So we are now in that first, where it says first big rally. That's where your index is today. All right? So what's going to happen? Look what happened to BDO after that. So that's a type of cascade that can come in. That's why I told you there might be some choppiness into the market. But I think that's what you should be waiting for, or else how are you going to be able to buy at better prices for your stock? And if we've already attested to the fact that more likely that's the low, you should be buying this second dip. As you see it more gradual, cascading like this, that's the kind of purchases you want to gradually do. If you want, do it maybe every month or every half a month. Go ahead and put in a small position while that's happening so that you can get yourself prepared into that. The second one is an example of what we call a support retest. And like I said, this is a bit more scary.
Mas nakakatakot kasi parang magbebenta ako dun.
Right? Because after going all the way up, imagine your stock will go all the way back down to the low. This one even broke it slightly, Bivia. So it really does that, and you can put to be a testament. But after that, it recovers already after. And so I would really rather that it's the first scenario that we would look at for a potential buy into your market.
All right. So again, some interesting discussions with our experts. If you have any questions, feel free to use our Slido app. Later on, we'll go through them. And those who are watching us from the comfort of their homes, feel free to also put in your question or vote for the question you like in the Slido app. Okay, so let's now move on to the more exciting part of this morning's outlook, which is our stock picks, right? So before that discussion, we again asked our customers these questions. So first is, what do you plan to do to your stock exposure in the next 12 months? And 68% of our retail customers wanted to increase their positions, right? We also asked them what percentage of their portfolio is already invested in stocks or in equity mutual funds. And 31% has mentioned 75% or above. Medyo malaki na. And at 28%, around 50 to 75%. Now, these are two different sets of customers, April, no? Those who are heavily exposed and those who are planning to add in some more. So let's start with the first one. What is your advice to those who are already heavily invested in terms of the sectors or the sectors in the market that you like?
Okay, so for the sectors, I come out with this naman every 6 months.
Right.
I think what I'd like to point out is, we have, since then we have become a little bit more cautious on the power sector. And on the other hand, we've become more bullish on cement and telcos.
Cement.
Okay. So yun yung key changes. For financials, we feel like, it's just valuations have become more attractive because they were sold off. We were bullish on them since the start of the year. So there have been opportunities because I think, given their strong run-up, because everybody was so bullish on them during the start of the year, there are now opportunities to buy more of them. Okay? So I think these companies medyo alam nyo na yung view namin. So I'll just, focus straight on, say, the financials. Again, why do we like financials? Because there's strong demand for loans, and of course, with the strong economic growth, we feel that demand for loans would remain robust. And with the rising interest rates, they're going to be one of the beneficiaries because we feel that they will be able to reprice loans higher, and this will allow them to earn higher margins. Okay, the major risk that we see for the banks is that their loans to deposit ratio is now at the mga 70+% range. Okay, meaning that they've already lent out a big chunk of the deposits that they have on hand. So with that, they will have to raise interest rates to attract more investors or more people to put in more deposits. And that could lead to some level of margin squeeze for funding costs. So I guess the question is, which one will triumph? Is it going to be the repricing of loans or the cost of funds? And so far, we're seeing repricing of loans to be a stronger factor at this point. So we're more bullish than bearish on financials. Okay, for the telcos and cement, what has changed? For the telcos, during the first quarter earnings results, we saw significant strength already. I mean, first of all, we're already seeing data revenues accounting for a big chunk of revenues. In fact, for Globe, it's already at 54%. Okay, versus the legacy businesses, which is your SMS and your voice calls, that one is down to 40+% for Globe. PLDT medyo naiwanan, pero they're also seeing that transition with the share of data also growing, but they're still at the 40+% for data and low 50s for legacy businesses. So in due time, it will also shift to the 50+%. So with that, I think profits will be on an uptrend. And another positive we saw was that average revenue per user is picking up. Subscriber growth is also picking up. And it just means that people are now willing to pay to have access to internet because they stopped the free Facebook promo. Remember? So syempre ang tanong, kung wala nang free, babayad ka ba, di ba? So it's just data or internet access is that important to Filipinos that they're now willing to pay for it even though it's not free. Di ba? Kasi minsan pag tinanggal mo free, mawawala lahat. Ayaw ng, di ba? We don't want to do that anymore, di ba? So that's what we saw in the first quarter. I think the risk of a third telco is still there and people are worried about it, but the way we see it, I mean, if we think about the terms of reference of the government, it's just becoming more difficult for a possible third player to come in because the requirements would be 40 billion capex for the next 5 years at a minimum. So 200 billion pesos that you will commit to. Walang atrasan, bawal yon. And you're not allowed to sell to PLDT or Globe, okay? Unlike si San Miguel, they had that exit, and even Sun Cellular sold off, diba? So at least they had their exit, but now you're gonna come in, you have no exit, you have huge capex requirements, and I think most importantly, the price of data right now is so cheap. Kasi I think the focus should be on yung labanan nila is the 50 peso data packets. That's for Globe, if you get 50 peso, you get 1 GB of data for 3 days. Pero ngayon, yung 1 GB na yun, may plus 2 GB pa for certain apps. Then Smart, for 50 pesos, you get 1 GB data plus another 3 GB of YouTube access for 3 days. So that's 4 GB. Now, if you're a third telco player, you come in, you want to compete with Globe and PLDT, you have to give more than 4 GB for 50 pesos. Or else, there's no compelling reason for Filipinos to use your service. So it's gonna be much more difficult for you to make money. So at least that's our perspective. And while the government is delaying on coming up with the terms of reference and selecting the third telco, you see Globe and PLDT spending 40 billion a year on improving their infrastructure. So not to mention they already have several 40 billions a year that they've already spent. They're adding another 40 every year. So the infrastructure is becoming more robust. So, mahirap. It's going to be difficult.
Okay, mga third telco fans dyan. Yun na, dami nating
Yeah.
notes ngayon.
So I think kanina medyo sinilip namin. I think that's one of the questions eh. Who's gonna be the third telco?
One of the top questions actually. Sinilip
Yeah.
namin kanina.
Yeah, I think it's just gonna be more difficult. I think it's whoever wins it, you might see a surge, but after that, I don't think it's sustainable because now what? Okay, so now you're stuck with having to spend 200 billion. Okay, and you're not gonna make money right away. You're gonna lose money for a bit, you know. It's gonna be difficult, you know. Baka nga I think bebentahan yun after mag-rally.
Oo, right.
Yeah, and then for the cement, the reason why we're more positive is we're already seeing the results of the cement companies, and we've seen 2 quarters of recovery in cement prices because of the strong demand. My only worry is that we're still continuing to see imports come in. But the good news is at least that demand is so strong that it is able to absorb that and allow some price increases to happen. Okay, so at least, the worst is over. I mean, second half 2016 and whole of 2017, we saw selling prices go down and even sales drop. So at least now, we're seeing some recovery and it being sustainable. Okay. So sa power naman, well, consumers, it's more because they're sensitive to inflation. So that's not good. There'll be potentially may risk na demand will weaken and costs will go up. But for power, the reason why we've become a little bit more cautious on them is because what we noticed lately is that the selling price is going down because of concerns on supply. Kasi baka may oversupply sa power generation. Okay, so the selling price is going down and the cost is going up. It's because coal prices, oil prices are going up. So pababa revenues, pataas ang cost. So that's weaker profits for power companies.
Right, but how about for customers who want to add on? What are the stocks that you like, April?
Yeah, so we'll talk about the stocks that we like. So I think like Ayala Land, we've already talked about in the past how much we like it. We continue to like it. It's a well-diversified property company, and I think what's important is, profits are still on track to reach 40 billion by 2020. And then, it has a lot of land bank. I think that's very important right now because if you're gonna buy your land right now to sell, it's very expensive. At least sila nandyan na yung lupa, no? And yeah, valuations, in our opinion, are still attractive. It's trading at 21 times PE, okay, which you might think is not cheap, but for an Ayala Land, in the past 10 years, it traded at an average of 28 times PE, and it's currently trading at a 23% discount to net asset value. Okay. So Mega World, if you like Ayala Land because it's cheap, Mega World is an even cheaper stock. And what is nice about Mega World is there could be a potential re-rating, meaning it has changed its business model to have more rental properties, which the market likes because it means that you will now be more defensive because you have rents coming in. And that's going to be less volatile than, say, a purely residential-focused developer. Okay, and valuations are even more attractive.
Just to clarify now, it's 1 times price to book value.
Yes. So that just means that you're pricing Mega World as if all the property in its books never went up in value. Kumbaga yung purchase price niya, yun pa rin. When in fact, we know that that's not the case. Which is why the net asset value, which prices in something which is more market-based, it is trading at a 42% discount. And it's trading at around 9 times PE. Okay, Bloomberry, well, This one, we like it. We like the gaming sector. We're seeing strong revenue growth, strong net income growth. We saw that from Bloomberry. But I think right now the problem is there are rumors that the second quarter earnings of Bloomberry is weak. Okay, so I guess, I don't know if this is permanent. Most likely it's only temporary. Okay, but for those who are a bit worried, maybe you should wait until the second quarter earnings comes out, which is already going to be, I think, August 13. But over the longer term, we're still okay. We're seeing demand for gaming picking up still in the Philippines, and we're seeing a lot of gamers coming in from China and benefiting gaming companies. Okay, Metrobank. So this stock was sold off quite a bit. We like Metrobank because it's one of the big three banks, so it should benefit from higher demand for loans. And funding, I don't think will be an issue because they just had a rights offering. Okay, it was sold off due to rumors that it was victimized by a new loan scam. Okay, but for me, I think, this was denied by the bank, pero I think the greatest proof that they really weren't victimized was that the insider came in to buy 5 million shares at 69 pesos. So that was the son of George T. Si Alfred T. He bought the shares. So I guess, if you have problems, you won't buy it if you're the insider, diba?
Binili ng may-ari.
Yeah, I guess he's trying to prove we don't really have problems, so I'll just buy it, take advantage of this. Okay, so, we've added Security Bank recently. It was sold down and, creating this opportunity for us to buy this bank. So we like Security Bank because it has successfully shown that it could transition from a predominantly trading bank to now a lending bank, consumer bank. So its consumer loans have been growing quite strongly, and this has allowed its margins to actually improve. Okay, and it's trading at 1.3 times price to book value, which for us is cheap, okay? Because historically, during the past 5 years, when this bank re-rated higher, the average price to book is 1.6 times. Okay, so when you say one standard deviation below the mean, it just means that more than 80% of the time in the past 5 years, it was trading above 1.3 times. Okay, and then we have DNL. So DNL is our preferred stock for consumers because, for demand, we feel like its focus on specialized products is will allow sales to be more defensive. And secondly, with concerns of rising inflation, I don't think it's being affected because the major raw materials are coconut oil and palm oil, prices of which are going down. Okay, and it's also not affected by the weak peso because it also exports a certain portion of its, it generates export revenue. So the added income from exports will offset the higher cost from imports. Okay, yeah. And then valuations ng DNL kanina, attractive din. Relatively attractive because it's 22 times, but it's going to its earnings are going to grow faster than the industry. Okay. Then we have SEC. Okay. So I know I said we didn't like power, but we like SEC not for its power business, but for its coal business. It's a vertically integrated power company that also has its own coal or fuel.
Which means a power company that generates its own fuel and sells its own electricity, right?
Yeah, and also it has more than enough coal,
okay,
so that it can also sell its coal to other parties. Okay, so earnings have been very strong. Valuations are also very attractive. Stock is only trading at 8.4 times PE, and insiders are also buying this stock. Okay, which is very good. Okay, and Ayala Corp, we like this holding company, and well, it has some defensive companies inside, like Manila Water, but it also has a growth orientation because it has BPI, it has Ayala Land, and recently it entered into the power sector because it wanted to give investors a reason to buy it outside of the listed subsidiaries. Kasi kung lahat ng subsidiaries mo listed, there's no reason why you should buy a holding company anyway. So they're entering into the power segment, and so far that's been doing well. Okay. Our only issue with Ayala Corp is it has rallied quite a bit, and it's already fairly valued, but when share prices go down, I think you should look at this. Okay, then for the telco sector, our preferred stock is Globe. Okay. As I've said, si Globe nauna kay PLDT such that data is now 54% of revenues. Okay, so that's the reason why we like it better. And in the mobile business talagang, I think it has overtaken Smart quite a bit. So valuations, well, again, this stock has rallied quite a bit. But if it pulls back, definitely you should take a look at buying this, yeah. Okay, for the cement companies, our preferred stock is Eagle Cement. Yes, because Eagle is more competitive, more efficient, and well, in our opinion, that should allow the company to face competition better. Okay, and well, we expect profits to grow double digits. Okay, so in terms of valuations, I think the stock has also rallied quite a bit. So let's just wait for pullbacks to buy the stock. Okay, so that's just the summary.
In summary, all right. Okay. So once again, a recap of this entire event will be available in the COL Financial YouTube channel. So don't worry about it. You'll have a copy, or you can view this again in your own time. Okay, so moving on to your technical picks, Sir Juanes, just a quick question. Ano? So we asked our customers which you think will perform best in the next 12 months. Lahat ng mga nag-register sa atin through our event is that 52% of our customers said that blue chip companies or large caps will outperform. Another 30% says the growth stocks, 12% value or cheap stocks, while 6% mentioned the small caps, yung mga maliit nating issues. So, Sir Juanes, anong bibili natin?
I'm actually surprised with your results. A few months ago, all I saw you guys buying were all small caps.
Small caps.
Maybe you had
6% na lang.
Okay, but I think you probably are hitting it on the dot because I think the blue chips, after being sold off tremendously, will more likely get this just to show more durable action. When I say durable action, it's something that can be a bit more sustainable. But mind you, I think in this next few months, you're still going to see a split type of activity. You're going to see blue chip and even medium and even small caps move, because the minute blue chips even start to consolidate, you know what they say, you're going to play, and that money is going to go back to where the small issues are. So you're going to get these rotational movements into the market. Just remember that every time the blue chips start to move together, the smaller ones will tend to park, right? Because the initiative for people is really to look for value in these blue chip counters, and they're just really waiting or dying for an opportunity to buy them at better prices. And in the mainstream, that's what's going to keep you making money more durably over time. So that's the position you really want to be able to wait for to get in. Now, some of the things that I've observed, I told you earlier that I've seen evidence already in some issues that have actually been making good bottoms. And these are the ones that are a little bit ahead. So for example, the picture that you see there in Globe Telecom. Now Globe Telecom, when I actually saw that first pattern shooting up, let's just categorize the way these things are, because you'll see later we're just going to repeat the same analysis over and over, right? So for example, in Globe, you see the sudden spike up into the market price after a downtrend line break, right? So sometime there, maybe towards May to June, a very sharp up move, the very first big rally that you see. And that's typically what your index is doing right now. So we're in that stage. Afterwards, Globe moved back in and started to move up and down and cascaded into that triangle-looking formation, which we call a wedge. That particular wedge pattern tells me that people are starting to accumulate Globe Telecom a bit more robustly. Now, I know it was very wide range because the liquidity here sometimes is very dry. That means the number of shares are not so plentiful. And because of that, you see very wild movements. But I've actually been drawing this pattern, and as I was looking into patterns like that, I was actually visiting research and asking them what's going on here. I can feel something's going on in Globe, and they were already seeing some improvements in the company quite earlier back on. And that type of motivation plus the pattern equates to a very strong moving issue. And you see, after it broke through that, wow, it just took off. So these kinds of patterns are something that can be quite beneficial to you, because when you see the first surge, okay, if you want to trade that, it should be very quick only. Then an accumulation pattern will come out, just like what I pointed up in the previous slides. And after that, it breaks out and becomes more intensified, because now the proof of your speculation is actually there. The earnings are better, stronger substance. Since a lot more people want to buy the stock, you have a relatively rapid increase in price. The second picture you have over here is MPI. Actually, I drew the same pattern last weekend, and I had to adjust it already because prices just broke free from it just a couple of days ago. And again, it lined up. I think earnings was good. Yeah, earnings was good, which I think came out when, yesterday? Yeah.
2 days ago.
1 or 2 days ago, and because of that, it managed to be able to break through that same type of pattern that we were looking at. And that's a very bullish scenario, because it already showed you that there was accumulation taking place inside there. Please understand that you and I will only see that earnings when it comes out yesterday or the day before. But there could be some people who might see what those earnings are taking place. There are people who work in the company, people who work with the company, and maybe they're already getting a sense. Maybe even the suppliers, seeing how they're doing things, might be able to take. And they take a little bit of an aggressive position inside already, and it broke free. So these types of area patterns only take in major bottoms. So that's another sense where you're saying, if I can see two companies doing this, hope to see more, and that should be able to give us good confidence in moving back into the market. So these are good companies. In pullbacks, you want to be looking at these companies again.
So, sir, for instance, yung sa Globe, I think it has gone up quite a bit already.
Yes.
So what are we looking for here?
A pullback should not go inside that pattern again. Okay. So if you get even a half distance downwards from what you see in a height, that should be good enough for you to start to prompt to be able to deliver your new entry into that particular stock. Or if you have it, maybe you want to take a little bit of profit and then wait to buy back when it does that particular dip.
Okay.
Same for MPI, although there could still be some space for MPI because it just began, not like Globe, which went through. Yeah. All right, another one that also looked quite interesting was, I think it was SM here on the left, and you have Mega World on the right. The reason why it raises my attention is because it breaks out of a downtrend. So in other words, hindi na siya pababa yung angulo niya. Once it starts to flatten up and you get these particular consolidations, just like what you see there in SM right before it pushes, so it bursts up. The reason the moves are very sharp is because you're coming from a market that has nearly zero a position. See, during that entire camp, they were just selling and selling and selling their positions all the way through. So now not too many people are positioned. It erupts. Everybody gets caught off guard. They said, oh my God, it's starting to move. I have nothing. So what do? They jump into the bandwagon. They try to buy the shares back. It creates immediate volcanic movement like you see like that. But these things will have to settle down. And as that thing settles down, that's where you guys should start coming inside. Because sometimes it's very difficult to predict that onset of the first big decline. So wait for this to pull back. I do hope that it can come back just not so far away, and that should be able to give you a good opening to buy SM. Now, Megworld, a little bit more advanced, not as advanced as Globe and MPI, but maybe somewhere in between. And this is going to complete a big consolidation pattern here. So you want to be buying Megworld maybe somewhere where those red, blue, and green lines are. Might be better openings for you. And one day after it pushes above that flat red line that you see, that will tell you it's starting to intensify already. But this one, you can take your time, right? Normally, Megworld trades a heavy amount of shares, so this might need some more wind up. But the worst is over, at least in my perspective for Megworld.
So just to clarify, now you're going to buy this above the red, green, blue lines or within?
First, you buy it as it pulls back to those smaller moving averages lines. That's a good opening. And then get your core position in. And once it breaks out of that red line, then you can add to your position. Normally, I like to buy these things as the consolidation comes, so I have a good position at good price. And then if I want to intensify my position, I will wait for the trend to tell me it's starting to move aggressively. Then I add maybe 30 or 40% more.
And that breakout happens when the red top line is broken.
When the red top line is broken.
Okay, claro. All right. So
now,
moving on.
In the smaller issues, so I've dug into some of the issues some of you guys have been looking at. And of course, TBGI remains to be one of the companies that takes in good volume. Now, since you're going to trade this no matter what, right? You might as well know how to do it well.
No matter what we say.
Now remember, many of them, not all of them, some of them might have some realistic story going on, okay? Some of them are pure speculation. In other words, nothing's really happening. People just toying around with it. But the movements are always pretty much the same. So as these speculative stocks move, there is a process flow. So you have to ask yourself, where are you in that process so you know what to do during that particular process flow. So for example, let's look at TBGI first. When TBGI began to move, just like what you saw in, let's say, for example, in Globe, initially you just see a spurt up after breaking through a very, very quiet period. And it just goes up as if there's no tomorrow. And that very, very first move will tell you, people are speculating this company might go somewhere, might be doing this new project, or maybe somebody got a feel that maybe earnings is improving, but they're not sure, all right? Now, people are not sure, so they cannot price, all right? If they knew exactly what was going on, it's easy for you to tell up to what price a stock would go to, because you know what the value would be given the fundamentals. But if it's speculation, it's uncertain, and people are just wondering what it is, then it darts up, and it's very hard to tell where it would stop. So after a spike up like that, where something's going on inside the company, it will go through a selling phase. The longer that takes, right, and then you will see how true it is, the speculative interest is. So in other words, if it goes all the way back down, more likely what you've been hearing is not true. If it goes halfway the distance, just like what you see in TBGI, pwede pa. You might say, baka may mangyari talaga rito. And so what happens, it goes to what we call a wind down phase. Now the wind down phase is a profit-taking maneuver here, and then it starts to settle down because people who think that the interest of the stock is going to come back, so they're accumulating, all right? After that, you see another pitch that comes up. Stocks break out, and then they wind up again. And from that wind up, you have to be very careful, because normally it's there where the truth will start to come out or not. If it's true, then more likely you get a nice solid swing. If it's not, then you will see prices come back down. And you see the process here. In fact, I'll just show you another stock. It's not as active as the first, but if you look at the second stock here, which is Mabuhay Holdings, do you see the relative similarity in the formation there and the formation here? Yeah, and you're going to see quite a lot of smaller issues actually draft this particular type of formation. And so if you see a push-up, then you can go ahead. Every time you see it punches out of a resistance, you trade it. The minute it quiets down, I would suggest you take your profit. Okay? Because there's nothing in here as of yet that's telling you this is going to be a long-term play for you. This is a speculative play. So if you start a trade based on speculation, you have to end it as a trade and not as a long-term position. Unless you don't have any qualms about holding it till kingdom come. All right? So please, this is not the stock Warren Buffett would buy for 20 years, all right? And neither should you. You should be trading it. Can we have the next set, please? All right, so if you look at the stock on top, here's another one that's come back into activity list. Again, very sharp up move, and now it's consolidated, right? But what you don't see in the left is there was a bit of an up move there before this big wind down took place, and this was a very long period of time. And just recently, just last couple of days ago, it had activity again. So again, so if you're moving through this speculation, enter it, go ahead and trade it. Just please make sure that this is not to be a long-term position, because right now nobody really knows what the end result of this. Yes, I know there are rumors here, but you keep it as that. You cannot come inside and take that for a fact until we see things realize from that. Of course, this is one of the favorites. I mean, in fact, when I was walking in here today, I had 5 people ask me about this stock earlier on. So this one was a very, very big consolidation pattern for ATN, and it erupted, and as of yesterday, it kept on continuing to move and move and move. And so here there was supposedly some fundamental changes, I believe, that's going on here.
I think BPI came out with a report saying how earnings are very strong. It's supposed to be valued so much. Haven't seen it yet.
Yeah, okay.
Yeah.
That could be the reason why it was a bit more sustainable, because there's some release of information now, and that's the reason why you're getting something more durable. I'll tell you, if you press the enter button there already, you're gambling, right? Because technically there is no more setup. You're way up there. So my question to you is, if it stops moving, where do you think it will go down to? But then again, you don't want to think about that, do you? Now, please, trading is a twofold street. It requires entry and exit. When you enter a position, it's all about greed. When you exit a position, think of every emotion you have, it's there. And that's why it's more difficult. So if you're going to plan, you better plan your exit as soon as you buy, because you have to know what the realm of activity is going to be. Don't let this make you higup in there and then, you know, bahala na kung anong mangyari dyan. That's not the way a trader should be playing it. You should know what and qualify the risk involved when you do that. There are many other issues that are doing trades that are of that caliber. So if you're trading some of these speculative stocks, please make sure that you know, you put your protective stops in place. Be happy with a certain range if you get it. The minute you see momentum dry up, you should be liquidating it. Please take more focus into big caps, okay? So a smaller part of your position, if at all, will go into these. A bigger chunk of shit to be buying these pullbacks in these good companies as you see them in the next few, or maybe hopefully in the next 2 or 3 months.
So for clients who just can't stop themselves from entering these positions,
Are you in
what
one
are
of
you
those things too, Ed?
No, not really. A small amount probably, but nevertheless, what are the types of patterns you're going to look for in these things? Umangat na eh, anong hahanapin ko dyan?
All right, so I guess what you want to do is every time it shoots up, you should not be the participant when it's running already. That means huli na kayo sa balita eh. You should be waiting for it to quiet down. As it quiets down and makes a small little pattern like that, that's the kind of trade you should be watchful. And the minute it starts pushing out there, dun ka na pumasok. It's like a baseball player who winds his arm up like this before he tosses. So these little pitches and these pullbacks like that, it's exactly that. You're winding up for the next go. What you just want to make sure it's going in this direction and not this direction. Because if it pitches and it pitches down, you're going to have a hard time selling. So always wait for the wind down.
The wind downs. Yeah. All right. Okay, so there you have it for the stock picks. Has now moved to the top 10 stocks that you asked us to discuss. So again, when you registered, we ask you for the stock that you want us to talk about, and here we go. So for the first issue, Ayala Corporation, I think we've covered it on the fundamental perspective. So Sir Juanes, can you
well, Ayala Corporation,
talk a
I
bit
know
about
April
this?
said that it rallied up already, and I kind of agree, but the nice thing about the pattern is that it shows you it's broken out of the downtrend. So this is one of those issues that into a pullback, you should be accumulating. All right, so it'll come back. I don't think that's coming back down to the previous low. So maybe a half a distance or maybe 1/3 the distance dip, that might be a better entry.
Okay. Next, we have AGI.
Yeah,
April?
okay, AGI, fundamentally, valuations talaga yung strong point ito. It's a very cheap stock. Yeah, you know, the subsidiaries themselves are already very cheap. But even if we use the market value of the subsidiaries, it's still trading at a 47% discount, so it's even cheaper. Okay. Our issue with AGI is there's no compelling reason for anyone to buy it, because all the listed subsidiaries or all its major subsidiaries are listed. So Mega World, Emperador, and Resorts World account for 93% of its net asset value already. And as far as we're concerned, our favorite really is Mega World, and we'd rather just buy Mega World. Emperador and Resorts World are still encountering some challenges at this point, so we're not yet that keen about buying them.
Next, we have Ayala Land. Sir Juanes.
Ayala Land, not as strong as Ayala Corporation. And maybe I would feel so. I think the property sector reeled in really because of the impending heights in interest rates. And I think that's the reason why some of the property companies, even some of them today, even the smaller ones, are having a hard time making rebounds because of that threat. But I think I'm fairly sure enough that this is probably not going to make a retracement all the way down to the previous low. So just like Ayala Core, maybe a 50 or 60% retracement of that rally that you see might be good ranges for you guys to start entering for Ayala Land.
All right. Next, we have Banco de Oro.
Yeah, we also like BDO. It's actually one of, well, it's now I think the biggest bank, and in terms of earnings, a big chunk or a very big portion of its profits are recurring in nature. Meaning, kasi you have banks na trading, very trading oriented, but BDO is a type of bank that has a lot of fee income, a lot of lending income. So yeah, it's more stable, and that's the type of earnings that people pay for. Okay, and the problem really with us is valuation. We just find it a little bit expensive, but you know, I think BDO is a stock that you should buy if it corrects.
All right. Sir?
The chart of BDO actually looks quite interesting to me. I've seen this pattern before also in BDO. It does take some time to wind itself out of it, but once it clears that red line on top, normally it sets itself a precedent to go well. So if it does get a pullback into that particular pattern, I would suggest you go ahead and accumulate BDO into that consolidating pattern that you get there. So even a 50% pullback should be good enough to be able to buy in.
Okay. CHP.
Okay, CHP. Like Eagle, we feel like it will benefit from growing infra spending, stabilizing cement prices, and it also has production increases, which will allow profits to grow. I think the main problem is this company has kept on releasing disappointing earnings consistently, which I think investors medyo nawalan ng gana. And it's not that efficient. It's less efficient because the plants are older, and it has a foreign parent which it pays royalties to. So that's hurting its profits. So that's it. I mean, yeah, valuations are cheap, but that's it. Parang it's just not our preferred pick.
Okay. Sir?
Well, the technicals for CHP are, I think, a bit more gradual in its turn. But looks like a major bottoming pattern is being drafted for CHP. Now, these things are called rounding bottoms, and unfortunately, although it's a bottom, it takes time to slowly, gradually pull itself out. So if you're going to be buying this, you have to be buying it after the dip as it comes closer to that rounding slant like this. That's when you should be buying, and I would suggest you do it little by little. Right? Don't be too aggressive buying this. Like a few days ago, it spiked up, and that's not the time to buy these kinds of movements. You have to wait for it to calm down, let it gradually turn back around, and that's when you put your placement inside. And this should not run away. So gradually, this should turn itself. So if you really find more value buying this than Eagle, actually I like the pattern of Eagle better also. But this one should probably be more gradual in your approach.
Next, FGen.
Okay, FGen. The good news is things are becoming better for FGen. One of the major developments that took place recently was that the ERC approved its power supply agreement with Meralco. Okay, so remember one of the issues before was that it had 2 new power plants, and one of the power plants, which was supposed to get contracts, was having a difficult time securing the contract. So finally, they've addressed that. So we don't have any more uncertainty as far as that is concerned. And then remember, last year they sold shares in EDC. So potentially EDC could be delisted because the free float is now down to around 10%. And if and when renewable energy becomes in vogue again, then FGen will be the only way to participate in EDC, potentially in the future. Okay, valuations are also attractive, 7 times PE. So the only thing we're waiting for right now is updates on the LNG regasification project, because the Malampaya field, which supplies power to, or supplies fuel to its gas plants, is expected to be depleted soon by mga 2022. So, I mean, we just need more updates there, but at least, they have more money at this stage and, more stable earnings. So, yeah, I mean, things should look good.
The chart of FGen is all right. I wouldn't say so negative, but I think it's all right in a sense that I think it's going to go through a consolidation phase. But it really needs to break that red line that I drew across the area to be able to tell you already that the potential stock reversal is coming back in place. It's near it, not so far from it, so a little bit more. However, the momentum indicators right now are telling me that maybe it might need to wind up a little bit more also. So again, I will only get this after I see it rush above that area. I'd like it to prove itself to me that it can sustain itself and of course be more acceptance with the changes April's talking about.
Okay. Next, Jollibee.
Okay, so we actually like Jollibee fundamentally. Revenue growth is very strong. It continues to enjoy strong same-store sales growth. Branch expansion is still continuing, and foreign operations are doing very well, actually. So in the past, they said we want foreign operations to be 50% of revenues. But they've been saying that for a long time. But I think finally now there's a chance that that could happen, because I think last year or first quarter, they actually saw foreign operations grow faster than Philippines. Okay, so China finally, they found the right footing on how to grow that. In Vietnam, the funny thing is, Vietnamese daw nagkaka-Jollibee party na raw. So yeah, so hindi, kasi usually their strategy is they'll go to another country and then they'll go to the places where the Pinoys are. But in Vietnam, it's the locals who are eating Jollibee. So, of course, the strategy in China is different. They buy a Chinese restaurant and then turn it around, It's not the Jollibee that's working. But anyway, that said, I mean, that's one of the reasons why this stock has performed really well, because there's something different, something changing. I guess the major risk is it's vulnerable to high inflation and valuations are just a bit pricey. But I think if you're a long-term investor, there's nothing wrong with the stock. It might be a laggard in the short term.
Sir Juanes, sandali lang bumagsak eh.
Yeah, I know. No, I think the challenges for Jollibee really was because of the pitch towards endo, the rise in beverages took its toll, I think, on the company. That's why people were quite off by it, and you have that sell-off. And, take heart that I think it was 277 close. So it's still slightly below your fair value. Mind you, this is one of the few times it's actually below their fair value. So take heart that it actually happens. But I think this, after a major rally, may need to quiet down. Right? So if it can pull back, maybe generate more spread to its fair value by building a pattern below that trend line that you see there, then it might be looking better for Jollibee. At this stage, maybe I'll be a bit more wary about entering or adding more to my position. I'd rather just pull back.
Karen, I just want to share my personal experience. No, when the market was correcting, I always check the investor's guide. Because it can actually, for a brief period of time, go below the fair values that we have for expensive stocks. Okay, next. Metrobank, we've discussed that fundamentally. Sir, you want to comment?
Well, Metrobank is one of the weaker technicals in terms of all the banking stocks inside. And again, it's still into a downtrending mode. And it just recently broke above that downtrend line yesterday, right? So I hope that can amount to something, because if this can continue, then you might be able to rally all the way back up to your next resistance zone, hopefully between that 8 of 70, 863, goes up to about even 83. After that, then expect it to make another counter reaction first for Metrobank. Metrobank and AGI are two of the stocks that foreign flows were like really hammering, and that's the reason why they stayed so low into that downtrend condition. But they've reduced their positions in the stock already. If things normalize back in there and these major funds come back in them, that could spirit up more activity later.
Well, question, sir. As compared to the other stocks that you pointed out kanina that also broke down from their downtrend, ito parang less aggressive, ano? Yung breakout niya. It's just
well, it's late. It's late because,
and
like
it's
I
small.
said, because it was undergoing a major sell-off by the foreign funds. And this recent rally is kind of telling you that they've exhausted at least that major wave. There might be remnants, but it might not be one that might, undo all this rally that it's seen so far.
Okay, that's good to hear. Next, MPI.
Yeah, MPI, well, it's one of the weaker stocks for the year. But the good news is valuations are already very cheap. It's been sold off due to concerns about its toll road business and its water business, because they're not getting the rate hikes that people want them to get, or that they're supposed to be entitled to. Okay, but the sell-off has been so severe to the point that at the current price, you're only paying for its shares in Meralco. That's the only thing you're paying for. Toll roads and water businesses are for free already. Yeah, so
Nice.
yeah, valuations
Okay.
are really very attractive for MPI.
We've discussed that technically a while ago. Again, as Sir Juan has mentioned, wait for the quieting period for that. Next, we have, yun pala, it's still there.
Yeah, we discussed that.
Discussed
It's
it.
a nice looking chart. Very nice.
All right. SM.
Okay, so SM is actually, fundamentally we like it, and I think one of the reasons why, it has re-rated and continue to perform well is because of its focus on consumers, focus on retailing. How consumer spending in the Philippines is very resilient, and that's why I think people like this stock, and we like it. We like it as well. Okay, so the SM retail and leasing component of SM Prime, which is the malls and even the offices, account for 50% of net income and 64% of net asset value. So very defensive company. But again, valuations are a bit expensive. Okay, so this is a stock that we would buy on corrections. Yeah.
Okay. Sir? I think we discussed this
Yeah, we
already.
discussed SM.
Okay.
It also looks good. Pullbacks are opportunity to pick up this stock.
Okay, next. SMPH.
Okay, SM Prime, it's the biggest mall operator in the Philippines, and being a mall operator in the Philippines is a very unique business proposition, because ever since I started working as an analyst up to today, I've never seen SM Prime report a down year. It just up, 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 up. I guess if you have a store in SM Prime, your rents just keep on going up as well. Okay. I think no matter what happens, Filipinos just like going to malls. And anyway, another catalyst for SM Prime is, or another exciting thing about SM Prime is the plans to reclaim in Pasay and Parañaque. I think the size is 600 hectares, and the cost to reclaim, including the roads, the donations they have to do to the government for the reclaimed land that the government will use, etc., is 30,000+ per square. But the market price of property in the area is 150,000 to 200,000. Okay, so if they really do push through with this reclamation, then definitely that's a major plus for SM Prime. Well, the issue for us again is valuations. You know, in the past, in the 1990s, Ayala Land was the most expensive property company, but now SM Prime is the most expensive at 34%, for 34 times PE. Okay, and the risk is the execution of the reclamation project, and in case, just in case, which is not a risk right now, that you know malls become ghost towns like in the US because of the popularity of online shopping, which you know we're not yet seeing right now. And at least for SM Prime, if you notice, nowadays you go there more to eat or to do your thing, like watch a movie. I think that is the strategy that they're doing right now. They're veering away from being too targeted on shopping, more of lifestyle and you know leisure.
Most importantly, aircon. Libre aircon. Sir?
Well, you know, the advantage of going through a major reaction into the market is really the ability for you to buy potential value stocks. And this one didn't really pull back so much, right? And so that's why I think that it managed to be able to climb back up right away. And your upsides from where we are right now are kind of stunted. And so I guess either we wait for a bigger pattern to develop here or a pullback takes place in price before we can see, because we have two major resistance not so far away. That kind of limits my upside for SM Prime in the short term. So I'd rather buy this into a dip.
Near the blue line, sir, or somewhere?
Below that, a little bit below that blue line, maybe towards your moving averages.
Okay, all right, got it. Next, Tel, I think we've, no, sorry.
So similar to Globe, it's also, we think it will turn around soon, except that it's taking longer because data is not yet 50%, but it's going there. Well, the mobile business, they're not doing as well as Globe, but the main advantage of PLDT is the fixed lines business. Of course, it has a superior fixed line infrastructure because they had a major head start. So they're doing yung mga data centers, no? They're quite strong there, and of course broadband. So sabi nila, demand is there. Ang kalaban lang is infra. How fast do they build out the infrastructure so that they can meet the demand? So it's gonna turn around. Okay. So valuations are attractive. So it's a buy in our opinion. It's just, of course, lagging behind. So it's a secondary pick. In
So okay lang si Globe?
Yeah.
Okay. Sir?
PLDT might need to coast sideways a little bit more. It also had a very nice run, just like Globe, but unlike Globe, it did not build a pattern. Right, so that's what I would want PLDT to be able to form before I start looking to gradually accumulate into that stock. Maybe even a pullback towards where the previous downtrend line might be a better way to be able to look at it. So between, well, I put 1,330 to about 1,250 as a support for PLDT.
Has to build some foundation first. No? Right, next, Cebu Pacific.
Okay, Cebu is very sensitive to the weak peso and rising oil prices. Dollar-denominated expenses account for 65% cost, and oil is 40% of cost. So, you know, that said, we did some analysis, and we feel like the current price already reflects the current weakness of the peso and the high oil prices. I think the major risk at this stage, though, is that investors are still worried about the weakness of the peso and rising oil prices. That's why it just doesn't want to go up. Because if indeed the peso continues to weaken and if oil prices continue to go up, then it still has room to go down.
Okay, sir.
No, I think the technicals very much agree with the April. Right now, people are playing such a defensive game that I'm not really seeing too much substance into the recovery. So, yeah, I think you might need a little bit more time for this to unwind itself before looking to get back in.
Next, now.
Okay.
No.
So yeah, I know this is a favorite. Believe it or not, it was requested in Cebu and Davao as well. Talagang, and it's not even like the 10th most requested. It's like up there. So yeah, I mean, it went up because it was a potential third telco player, or due to excitement that it would be. But if we look at the numbers, does it really have what it takes? So market cap of now is 14 billion pesos. And remember, I said earlier on, you need 40 billion and you need to commit to doing it 5 years. So you need 200 billion commitment to be the third telco player at the minimum. Okay, and this guy earned, they reported strong earnings last year. But when we talk about strong earnings at 6.8 million pesos, okay, so realistically speaking, they have to do something for them to become the third telco player. Okay, and again, earlier on I said that maybe if they get a third telco license, you'll see a pop, but when reality sets in, I think it's a sell on news kind of thing, because they will really have a hard time competing, because PLDT and Globe have such a major head start, and the prices of data have come down to such cheap levels that it's gonna really take a lot of time and effort for the third telco to be profitable. Right. So yeah.
So whoever that third telco is, it's going to spend so much money, not earn for a considerable amount of time, and it's going to go face-to-face, toe-to-toe with Globe and Tel.
And so potentially lose
hard.
all 200
It's a hard
billion.
job.
Yeah.
Okay. Sir?
Okay, so if you remember what I was talking about with some of the stocks I described of this caliber, it did its first push there on the left side, right? So that's where stories were talking about potentially what this guy could do. Now it's in its wind down phase, and you can see why it's still consolidating. The only thing we're gonna have to determine here is this wind down phase gonna stop here in the first blue line, or is it gonna go to the next blue line? And mind you, that's a big difference in price. But potentially what we need is for this to elevate itself over that downtrend line, or that red line you see, before any other spike would more likely come. So right now it hasn't done that yet, so I would refrain from getting in there until I see prices at least try to challenge that red line all over again. And yes, please, remember what she said. This is gonna take time and effort to be able to rebuild itself, even if it wins. You know what, earlier in the year, I actually, was able to meet a couple of guys who run businesses that you guys are trading, and they were really up there, very, very willing to become part of the third telco list. And when I talked to them, maybe in the last week and a half or so, again, I noticed now they're unwilling to throw themselves into the list because the barrier of entry is just too expensive, and they can't do it on their own. So. Just reminds you of how much speculation we're doing trading their stocks still.
All right, next. Mega World, we've already discussed that fundamentally, so sir.
Good, yeah.
Oh yeah, we also discussed that already.
Yeah.
All right, so moving on, we have Meralco, sir.
Well, Meralco actually had, I was quite unfortunate. I was, not really able to partake of this, one of the strongest stocks in our market, and seemed to be defying gravity all this time. Although in the last couple of days it shot down really quite heavily, but it's because it was very overbought. So I think Meralco just needs to be able to wind up again after this very, very hefty advance that it did. Right now, I don't see new pattern being built right now, so let it finish its correction first before looking to be able to pick this up. But I don't know, how cheap is it? How expensive, rather?
Fundamentally, yeah, actually, we find it to be expensive. That's why we're not recommending it as well. We have a hold rating. And, well, if you know, really think about it, is there anything really good about it? The higher rates, higher inflation could be good because it might mean that if they will do they talk about the rates of power, they might be allowed to actually increase power rates to factor in the higher inflation, higher interest rates. But then again, to warrant this much, I think it might have to do with the speculation about the Ghana project that people are thinking about. Yeah, there's a Ghana project, but we don't know what they're really going to do. I asked George Ching about this, and he said, you know, the problem is there's no details about it. Well, they have a 30% stake, and I think the reason why people are excited about it is because the size of the concession in Ghana, I think, is 20 million. So that's big. But we don't know if they will act as a consultant or they will ask to do some capex to enhance the efficiency. So the potential P&L impact on Meralco is not yet clear at this stage. So, you know, we can't really say or commit. But he was mentioning something like an investment of $500 million US, which for a company the size of Meralco, that's like less than 10%. So that's not a lot, you know.
All right. That's your top requested stocks. Then let's go to the most exciting part of this morning's event, which is the Q&A using, of course, your app in Slido. So I think this is the number one question, no? The most voted question is from Mr. Peanut. If Train 2 will be passed and approved, what is the possible effect it may bring to the market?
Yeah, initially I was thinking more positive, but it probably will not be positive across the board because there will be some companies with low, well, I guess to start off, you know, Train 2 will focus on addressing the tax rates. In general, tax rates will go down from 30% level, whereas those companies who are enjoying incentives will, you know, have their incentives taken away or rationalized. So it's not going to be a, you know, 100% everybody benefits. You have to take a look at which companies are enjoying incentives, and they probably will not benefit from it, whereas those people who are paying the full tax rate will benefit. But in general, I think, you know, from a macro perspective and a long-term point of view, this is a positive because tax rates in the Philippines are the highest. And it will discourage us from attracting investments. And once it goes down, at least, you know, it improves our competitiveness.
So don't worry if your question is not upvoted or not discussed here. We will be answering your questions, and you may log on to your Slido app around Wednesday so you can see the answers to your questions. All right, so we can please flash the next question. So, Yon, we've talked about Train 2. I think the next question will be about federalism from Mr. Tuason. If our government turns to federalism, what do you think will happen to our market?
Okay, it's an interesting question. I don't really know. I guess it depends on what type of federalism we're talking about. Some federalism governments are good, some are bad. So, yeah, I guess it remains to be seen. We have to see the form of the federalism that will be passed. Some are good and some are bad. Of course, there are risks and there are also benefits.
The more we know about it, the more, of course, we can comment on the market perspective.
I don't think you're going to have that very soon anyway, so you might wait for a couple of outlooks before that reality comes.
Baka question pa rin to next time. So next question, who is the third telco aspirant with the best chances of winning? Number 3 question, huh?
I honestly don't know actually. But
Hirap.
yeah, I mean, I don't know. Is it a blessing or a curse if you win it, you know? Baka nga it's a curse. Eh. So I don't know. I really don't know who is really interested. There's a lot of speculation, but parang they die down. They don't really last. So I don't know.
I mean, there's a really lot
I think it'll be very difficult because the rules of how they're going to be bidding that thing out are still fluid, right? And I know they promised that by December of this year that they would announce the names, but things are happening along the way. They've been changing the barrier of entry, and that means that the guy who's willing to come in has to resort to seeing if they can do that on their own, or do they have to bring in the partner, because where do you get 200 billion from companies of this sort? I mean, it's very difficult.
Right, let's move on to the next question. Kanina, lumabas na. So from Cristobal, are the stocks related to infrastructure projects good to invest at this time?
Yeah, I think cement companies, well, we're seeing them starting to recover. Then you have the contractors. Problem with contractors like Mega Wide, they're a bit expensive, no? MPI is considered to be an infra company. The problem is yung existing projects nga niya are not getting the promised rate hikes. But then valuations are attractive. So I guess in a way, medyo priced in na rin ang build eh. So yeah, I don't think you can buy, I think yung major upside, no? Maybe cement companies na lang at this stage.
And I also figure, of course, these developments don't happen in like a month or 2. These things are gonna play out in the next couple of years. So the rewards may not be that instant as well. Okay. So next question. I think we have ayun, from again Mr. Peanut. Is it safe to say that the market is now recovering, considering that the PSEi is on upward movement?
Well, I think you've heard our view. Yes, we feel that your market is in recovery mode already, but I do also want to be able to caution that expectation with the fact that we may have to go through a consolidation after this rally. So just make sure that you understand what the framework would look like so that at least you don't get taken aback. And also, if you're willing to take a longer term position and you're willing to buy into this rally, you might have to, if not selling a little bit on this resistance high, you may have to hold it through the consolidation, right? Or else, sayang lang, on the way down, you get really scared when it nears a low, and that's when the next low is made and you're liquidating your position. So you're gonna have to learn how to sit tight on that.
So the answer is yes. Okay. Next question from Jazz. Does the trade war between China and US have an adverse impact in the Philippine markets? If yes, what industry or stocks will be most affected?
I mean, it could have a negative effect in terms of affecting also our exporters, because to a certain extent we export a large part of our exports to China as well, so that could be affected. But as to which stocks, I don't think we have a lot of stocks that are sensitive to that. And on the flip side of it, we actually heard, well, we talked to one IT company who does exports of, the semicons and other items, and they're actually very excited with this. They said that they're a global IT company. What they're seeing is a lot of the clients who used to be focused only in China, who focus their production in China, are now actually thinking of risk management strategies. Therefore, shifting some of the production away from China into Southeast Asia, Thailand, Philippines included. So they're expecting a significant jump in production. They're actually saying that if somebody wants to pull out of the Philippines, they will not stop them because they have so much more orders coming in from clients who are afraid of what's going to happen to China and are looking to relocate some of the production facilities to the Philippines. So that is the flip side to it. I guess it remains to be seen. We need maybe a few quarters to see which one will triumph. You know, is it really the weak demand from China, weak demand from the US because of the huge tariffs, or will we be a net beneficiary of this risk management strategies from IT companies?
Okay. All right. Next question from Maria Francia. Any blue chip suggestions to invest for a long period of time?
I think a lot of the stocks we recommended
Or blue chips.
are good long-term picks, especially those that, well, even those that we did not mention, but were part of the most requested issues that, you know, we just said were a bit expensive, but, you know, when they correct, I think they're good long-term investments.
Okay. Next. From Noel, should it be best buying stocks on my own or buying a mutual fund? Recommended both by Truly Rich Club. What percentage of my portfolio would you suggest on stocks and mutual funds? If it's good to have both. Sir?
Is it good to have both? Yes. I guess one of the challenges when, especially you're trying to buy a market that's in recovery mode is, which one do I buy, right? And if, let's say you just happen to buy three blue chips, and it is the rest that actually move better than the one that you picked, then you're not really going to feel too good in conditions like that. So I think what you want to do is you want to build a portfolio set on a blue chip index, for example. Put in 50-60% of your portfolio in there, and the rest is what you deal with your own choice. And try to see if you can outperform what that basic index will do by looking at the integrated values of, let's say, either the investment guide or what the calling the shots attempts to be able to get you in. So it's nice to have that figure. At the same time, you're constantly invested to, you know, really good issues that when the market climbs, you'll have a good chunk of this move up, and you won't really miss out on too much. So yes, I would really like maybe even a 50-60% split.
Yeah, I think, you know, even like small investors, if you have a small portfolio, and of course we talk about diversification, it will be very difficult for you to diversify if your portfolio is still small. So while you're starting out, it might be a good idea to start investing in mutual funds first so that it's immediately diversified. And there are times also when we're busy, we don't have time to keep on monitoring the stock market and, you know, switching from one stock to another, because, for example, the outlook might have been attractive before, but now it has deteriorated. So baka nalimutan, and then the next thing you know, it's down so much. So if you're very busy, you may also consider just investing in mutual funds instead of doing the stock picking, because it can get tiring sometimes. I mean, our life situation changes. Maybe in the past you had more time to look at it, but you know, as your responsibilities increase, then you have less time.
All right. Thank you for that. Mr. Dan, based on market cycles, will PSEi have another downturn when it touches the 8,000 level? So I think it's for you.
Well, yes, I raised that possibility because as your market went from 6,900 back closer to that level, you're bound to have some profit taking. And since the fundamental backing is not a very aggressive one, and more likely you'll probably see prices coast. So you might have another downturn, but I hope what you don't mean is that it's down spill below 6.9. That one I tried to do away with. So maybe just hopefully a 50% pullback or a 60% pullback of a rally that should be intense enough before it attempts to be able to make another recovery.
Okay. Thank you for that. From Mr. Alexander, if I have 500,000 available for long-term investment, say for 5 years, what stocks would you recommend? Yun na.
Yeah, I think a while ago we
calling the
already
shots and, yeah.
gave our list of stocks that we like. So yeah, I mean, pick a few of them or
Oo.
you do a mix of mutual fund,
Mutual fund.
with a little bit of them. Kasi like sometimes I like some stocks, but for example, like when I recommended the Bloomberry MRP, some people will say I don't like that kasi I don't like gambling, ganon. Or before we recommended Cebu Pac and they said we don't like volatility, because it's true. Airlines can be volatile or even yung DNL, meron din nagsabi, ayaw namin yan. Hindi naman, 'di ba? Parang it went up na and then went down again. We don't like it, no. So, it's really up to you. We just have a list of recommended issues. So, from them you can pick a few. If it's not enough to diversify, mix it with the mutual funds. Yeah.
All right. Okay, next. From Ronaldo, what is your market outlook for Bloom for the next 6 months? I think we've already answered that, no?
Yeah, we talked about that, yeah.
Okay. From Ariel, is the property sector good for the rest of the year?
Yeah, of course I'll say yes because I recommended property stocks.
Oo nga. All right.
But I guess that said, what's stopping them from going up really is the rising interest rates. But if you look at the earnings, you look at the take-up sales, they're still very strong. So fundamentally, nothing to worry about. Valuations are very attractive as well. So I'm really very confident. I guess if you're looking for a catalyst for how it could perform even stronger, if inflation peaks, then I'd be really even more bullish on property stocks.
Okay. Next from Mar. When is the best time to buy shares? How about selling them? How many % gains which could send signal for me to sell?
Well, there are two questions here, but essentially the strategy involved here is you shouldn't really always be focused on the percentage to sell something, right? Because you're going to have to take it for each stock. Some of them may have bigger upside, some of them may not. You could be buying a small cap or a big cap. That alone will change the percentile values of each one of them. So you're going to have to do a little legwork to see how mobile a stock can do before you instill a set percentage. If you're the type of guy who say, all right, I buy this stock, I'll sell it if it goes up 5%, then that means you will never ever participate a stock that will go to 10 or 20 or 30%, right? And you're limiting the amount of gains that you have. So you have to do some work to be able to make an assessment over how much your stock can climb before you can come around to be able to do this. In terms of the timing on the buy, I think my seasonality slide earlier kind of told you that August and November may be traditionally weak periods. So if you do see a correction in those periods, it might be just after that might be a better time, at least this year, to be able to generate some quick trades for you.
Okay. Next, from Nino, which mutual fund index do you highly recommend?
Hindi ko
I think we
kabisado yan eh.
I think we have two. For CRL Premium, at least we like two equity index funds. We like the ALFM, Philippine Stock Index Fund. It's operated by the BPI Group. We like it because it's very accurate when it comes to its tracking error. And we also like, equally, the Phil Equity PSE Index Fund. The Phil Equity PSE Index Fund, yes, right.
But seriously, guys, I mean, the job of an equity index fund is try to closely mimic the index, okay? There's really not so big a difference between every one of them. Of course, the ones he's mentioned are roughly the cheaper ones or the ones easier to buy in terms of costs and have a better track record matching the index. But all of them pretty much do the same thing, okay? So if it's a matter of pricing for you, then I guess which is the lowest one to buy as an entry, or just look at low-cost index funds are usually the best, but they tend to almost do the same thing.
And they are all accessible through the COL fund source. It's in the top right toolbar. Right. From Frederick, is it still good to buy CHP even if I've already lost more than 50% just to average down only?
No.
That's a no.
What I mean is, in trading, we have a very clear dictum that we do not add to a losing position, right? And the reason is because it affects you up here. And what you do is you always want to take control of a trade. You get the trade and you be the one in control of a trade. Don't let it be the one controlling you. Look, you already put a set amount into that stock earlier on, and now you're being forced to add to a losing stock because you've lost so that you can try to average down. What makes you think you're going to make money immediately anyway? Right? So instead of that, if you really don't want to be able to switch to a better issue, then you hold your position, wait for it to eventually turn around. Why don't you place your money in something that's more viable, that will generate better upside quicker, whose fundamentals much more keen, like she explained earlier on, that might be able to recover your loss here faster, right? It doesn't have to be in that stock solely. In fact, you're just adding to a centralized risk in your portfolio, and that's why I would argue no.
Eagle na lang, no?
All in cement naman.
Oh. From Manuel, any thoughts about mining stocks? Is it time to buy now?
Okay, from a regulatory perspective, I think our president has made it clear that he's not going to make it any easier for them. So, still not good. I think mineral prices are also not doing very well. So, you have two factors not going for them.
Regulatory and mineral prices. All right. Do we have more? From Edgardo, is VUL better than stocks?
Okay, my advice to you is simple. By the way, that's a variable unit life, okay? That is a product that is partly an investment and partly an insurance, okay? My advice to you is this. If you want an insurance, buy an insurance. If you want an investment, make directly an investment. If you buy a hybrid, it might sound that you're getting the best of both worlds, but it could be the inefficiency of both worlds also at the same time. So if you want to be able to put an investment, do it directly into that investment, because you can't get the full-blown thing out of that particular product. It sounds nice, yes, and admittedly, investment insurance really looks good, right? And that's why it's the top-selling product in their nature. But can it give you the optimum in terms of potential return? Because the idea is, if I want to get myself insured, I'm going to buy an insurance to the capacity that I need. Then if I want an investment, then I will make the investment in exactly where I want. You don't have any control of that because they would. Right? So try to be more direct in what you want. If it's a life insurance you're after, buy the life insurance. Investment, make it direct into the investment. You'll get better turnout there.
Yeah, I think the lack of transparency here is that because it's a VUL structure, I think the cost is more expensive. You could actually do your own VUL, your hybrid, make it your own VUL by buying a term insurance and combining it with a mutual fund of your choice. You actually create your own VUL and it's much cheaper.
Okay. Next, we have more questions. From Christine, how does the trade tariff policies being implemented by the US against China and vice versa affect the Philippines? What is the main reason why the PSEi went down on the first half? I think
we talked
about it. Yeah, it's the nasasama tayo sa pagbenta ng emerging market index. Next, Morgan from this gentleman. Morgan Stanley warns, prepare for the biggest stock market sell-off in months. How does this affect PH stock market?
Is that a new report or is that an old report? Because it could be an old report, because recently I actually read a report saying they're turning bullish on EMs, which is why the foreign funds are coming back. These reports also have shelf lives, so baka tapos na yan.
I think that's for the US, not for us.
Okay, check the dates.
Yeah, not for us.
Okay, all right. From Ariel again, which equities will come out bullish this second half of 2018? No, we've covered it already. So, next, from Dan, can we still momentum trade ATN today? But it is in the 1 peso range.
120 na yan. There might even be a little bit more because we still saw some relatively good volumes coming inside. I mean, I know there might be some still added push, but always take into consideration what risk you're taking as of this range. There's been no other setups coming into this, so I would see after this thing blows off, be prepared for a big whip back. So just make sure you wear your parachutes.
So Dan, mag-aantay tayo ng quieting period, ha? Yung konting sideways pattern before we pick this up. For Christine, any ideas on the current situation of the stocks related to the JGS group of companies? What are the factors currently affecting these stocks? Is it inflation?
Yeah. So Cebu Pac, we already talked about it. URC, the problem is it was very strong in the past because of coffee and C2. But the coffee business is currently being negatively affected by intense competition from Copico and Nescafe, and the stand of URC is we will not compete with them.
Okay.
Because if they compete and they spend so much money on advertising, at the end of the day, it's still negative on their profit. So kumbaga, they'll just look for the next blockbuster product. So C2 naman is negatively affected by higher excise taxes on sugary drinks. So the volume and the margins are being hit. Of course, higher inflation also hurting their profits. Yeah, not really doing well, and valuations, in our opinion, still mga 30 times PE. Still not very cheap.
Hindi na maki-Great Taste White yung mga tao. Yesterday, I just noticed they just released Great Taste Double White. I don't even know what that means. All right. Next from Apollo. How do you determine the best time in buying mutual funds and selling them to maximize your returns? Can you trade it?
The product is not designed to be traded, okay? Because if you have an entry fee and an exit fee, the reason it's there, one, is to prevent you from being too mobile. An index fund is really good long-term product. And in fact, what you should be doing is if you want to just buy yourself there in there gradually and not really be buying and selling and trading. Because even if you imagine, if you even try to guess the low and top of a market, and at least in the Philippines, you might have a chance because if you can go 20% difference, that's still quite a wide band. But that would mean you have to pick the absolute low and the absolute high and minus the cost and still try to walk out of there a profitable engagement. Then make sure you buy back when that low is generated. I think it's very difficult to do that in terms of what it's there. That's not what it was designed for. It's there for a good, solid, long-term investment. You buy it. If you want, add it every time the market goes down. That might be a good way for you to maximize a little bit more. And don't be buying it when it's super high or valuations are just too frothy already. Wait for it, buy it, or whenever you get pullbacks into support. That might turn you out a little bit better.
Yeah, and since a lot of equity mutual funds try to mimic the movement of the index, maybe you can use the index as a gauge as to whether it looks like it's a good time to buy, a good time to sell. Okay, if the index looks like it's going to break out, then syempre, bet ako like the technicals.
I have a convert.
Yeah. So, yeah, I guess you have to look at the index and try to analyze it technically for the market timing.
Okay, I think we have time for 2 more questions from Enrico. If my investment in blue chip companies had been showing decline in share price for more than a year, would you recommend selling it already?
Maybe not as of now. I think you've gone through the toughest part already, and since you probably did it a year ago, more likely you're catching the market coming from a low base. So I think just give it a little bit more time. Although do build in the fact that I told you there might be a little bit more of a consolidation that might come inside. So I think you've gone through the tough part already. You might as well just hang on to it a little bit while longer.
Okay, last question. We have from FF. What is the normal return from mutual funds? The value of my mutual fund did not change much from when I invested them about 2 years ago. Is this normal?
Again, only because you're looking at it from today's vantage point. And if, again, 2 years ago, the market was generally in a channel. And since we're in the lower end of that channel, that would be the reason why you're relatively flat. right? So I think you might have to be able to see a little bit wider stream here, and that you're asking it from a point that the market may dip. But if you had asked if the market were to normalize back in the middle ground, I think your position should start to be able to improve. And normal return, depending on the fund that you buy. If you are in an index fund, then more likely you have to average what the index averages. Right now, I think a 10-year average on the index was about, what, 8.5, 9? About like that, about 8.5 or 9% so far in the last 10 years.
Okay, that's it for the Q&A. Now, before we wrap up this session this morning, I'd like to ask you guys, are there any final words or advice you can give our customers today who came out to see us, or those watching us from Slido? So let's start with you, April.
Okay. So we'll start with the bad news first, no? We don't think that the current strength of the PSEi is sustainable, at least in the short term. Okay, because the challenges are still there. We expect to see more of them until the end of the year. However, you know, we would like to reiterate our view that we think that we've seen the low already at 6.9. You know, that said, if the market corrects from here, we should view it as a good opportunity to actually start accumulating stocks for the next leg up. Again, let's do it slowly through accumulation and use long-term money, and let's focus on the blue chip issues, which are trading at attractive valuations, because we feel like they will be the ones to lead the recovery.
Okay. Sir?
I think on my perspective is that we've had a good run in terms of the recent rally. We just need to feel out where the next level of resistance is going to present itself, and be prepared for the choppiness that's going to come out of this market. So in line with that, if I had built up a daring position coming into this initial onset movement upwards, I would take a little bit off at about this range, and then I would look to be able to reposition once that gradual consolidation would flesh itself back inside. The nice thing that I've seen is there are preparatory patterns that are building already. That's kind of the first track of this information of a potential turnaround that we're getting at. So we just need the fundamentals to improve a little bit. So that's why I think the consolidation will keep prices pegged in these levels. But after that, I think we'll probably see a little bit better market, but maybe towards the end of this year, maybe closer already to the extension of the new year. So if you're a trader, maybe take some off the table, wait for the pullback, position yourselves back inside. Again, remember, if you don't know what to buy, 50%, throw it into an index fund. That might be your best pick to catch a basket of stocks. The other 50%, start to choose your issues now, so that when the down move comes, you're mentally prepared to be able to take the positions in, because a trader who's mentally prepared will catch the opportunities that's presented. If you're unprepared for that, no matter what happens to the market, you'll never be there anyway.
All right, thank you very much, April and Juanes. Again, round of applause to our in-house experts. Thank you for sharing your knowledge. Again, we will be streaming this event in our COL Financial YouTube channel. So if you're not yet a subscriber, please do. You can rewatch it there. And all unanswered questions will be addressed in the Slido app by Wednesday. So you can log on to your Slido app to see if there is a response already to your questions. So as a final note, ladies and gentlemen, since the beginning of the year, since the 9,000 level, storms do come to pass. And we just have to look at data more carefully, and we use it as our guide. And of course, hopefully we can formulate the right strategy moving forward. And with that, thank you very much and have a pleasant day.
Thank you, everyone.